Hey traders, Nick here looking at the financials. They start reporting next week, I believe Monday. First, let's look at the financials in general. There are some things that are correct and others are not. The meme is that they can't rally. So I'm looking at 5 years worth of data here, weekly financials, and it looks like they rallied to me. In fact, they rallied just as much as the S&P basically. This yellow line here is the S&P, so not quite correct. Yeah, maybe at times it's frustrating because they spent a lot of time sideways and sometimes they fail. First of all, the whole bunch is great. I'm looking at the XLF, by the way. The whole bunch is great from the perspective of valuations and all of that. So owning them is not going to be a disaster unless we have a disaster like 2008, and right now it looks like their balance sheets are bulletproof. So from that perspective, we are safe. So in general, the blanket statement is that the financials are okay. So let me go down to, before I forget, if you don't subscribe to my YouTube channel, I always forget. At the end, there will be a little blurb up left-hand corner. Just click on it, subscribe, it's free. I post videos all the time. This video will probably have a second part to it, but that will only go to subscribers and people who get already emails from me twice a day. If you're not one of them, there will be a link down at the bottom that you can join. All right, so this out of the way, a little tidbit about the XLF, first of all. Can you guess what is the number one element of the XLF? You know, it has banks in it. What is the number one? I bet you most of you will not get that one right. I'll give you a minute, think about it. All right, time's up. Berkshire Hathaway is almost 13% of the XLF. What? Yep. Berkshire Hathaway. And then we get the JP Morgan, and then the Bank of America, Wells Fargo, Citigroup, American Express. That's also pretty high up here because it's not really just a bank, it's a transactor. Anyway, but those percentages are in line. The biggest chunk is the first two. The first one is pretty surprising. Anyway, back to the XLF. Now we're looking at a pretty long period of time. Let's narrow it down to see that actually we just narrowed it down to 1 year. Price tightening into a point, something's got to give, but they've had a good run of late. In spite of whatever Powell did, in theory, if he's cutting rates, if rates are falling, perception is, it doesn't matter really. The banks are going to make money. They usually make money on the spread. Powell controls the short-term borrowing rates for them, so that should make it better for them to make easier for them to make money as long as the long-term rates hold up, because they borrow short to lend long. So as long as they can do that, they're fine. So the short-term reaction over the earnings period, the short-term reaction, nothing gets their fundamentals, is binary. It's a coin flip. I have no idea how markets are going to react once a bank reports, even if they report a great scorecard. So let's look at the biggest guy. Well, not the biggest guy. The one that has the best reputation. Everybody you talk to, everybody comes on TV. Oh, I want JP Morgan because it's the cream of the crop. I don't know if it's true or not, but if they say it's good, I'm going to believe them. No reason for me to doubt it. So here's a daily chart for JP Morgan. This was a typical ABC move. They came back with an ABC rally. They failed at around the same level. So now that tells me that there is tremendous hesitation. When the bulls come to here, they look back and say, oh, look what happened last time we were here. We fell apart, right? So now we are up here again. So a couple of things. It looks like a mini cup and handle. So a couple of pokes, 2-3 pokes here. So it has potential. So now we're in the weeds already. But the point of this video is to, first of all, look at them all in general and see the schedule and see if there's anything we can a general statement that can help us trade individually throughout it. First of all, I can use the XLF to make a blanket bet on all of them, and I underline bet because it really, we don't know how they're going to react. This reaction was great. This reaction was also good. This reaction was not so good. So that's 2 and 1. This reaction was good. So 3 and 1. But I promise you it's a coin flip if you look back. So we don't know. Chances are they're doing well. They just told us they're doing well. They're going to prop up their stock prices with buybacks and dividends. So that was kind of like the juice from the all of them passing the stress test. So the government says, yes, you can go back and give a little more to the shareholders via capital appreciation one way or another. Either buy back to move the stock higher or give dividends increases. So it's hard to short a stock that's saying the company says, hey, if I fall, I'm going to be defending it. So if you want to mark it up, let's see here if I can mark it up. This is a new thing here. Let's draw. Okay, so you can see here, and this is a pretty pointy one. This is more like a rounded one, several attempts, but this was very pointed. Boom, boom, failed. So I could argue that, in general, if something does this, they might want to finish the job and do that. So is this the time for JP Morgan to go 124 or higher? I'd be willing to bet up than down over the long term. So if you tell me now you have to own JP Morgan for 2 years, I'd buy it. Or you have to trade it for the next 2 years, I wouldn't short it, I'd buy it. How I buy it depends. Selling puts, buying calls, all depends on personal preference. So that's just JP Morgan. First off is Citigroup, I believe. So let's go back and actually let's look at the schedule. I tried to get organized to make this video short, but it's impossible. Okay, so we got these notes from the other page. So Citigroup first, the next day JP Morgan, perfect. These are pre-open. And so first the golden child, then the black sheep, Wells Fargo, and then the wild one, Goldman Sachs. That's also on the 16th. So we've got 3 big ones on the 16th, all before the open. Bank of America on the 17th, also pre-open. eBay, yeah, forget that. I don't know why I still have that in there. Morgan Stanley on the 18th. And this is the weird one right here. American Express on Friday. So I'm long Square already and profitable. I shared it with friends. And that would be interesting for it. So I will have to see how I want to trade Square around that level. Because this starts the transactors. So PayPal, MasterCard, Visa, they all come the week after that or longer. So that would be interesting to see how that moves. Okay. So as far as bets, let's look at the charts. I bet you they all look the same. A lot of times I'm using bet. Okay. So let's look at the XLF. Tight with a chance to break out. So what do I mean? Price action is going, where's the annotate? I wish I didn't do that. Clear. All drawings. Boom. Gone. So they failed here. They're trying to attempt at it here. But they're also doing it from higher lows. And even higher lows here on a tighter time frame. So we went from doing this down to pinpoint. So something's got to give. There's a lot of energy here. Either burst or fail. But if they fail, it should be shallow. They just told us they're going to defend it. So it's easier to bet up than down. I will have a separate video to members about, and probably post in the chat room, about which ones I would trade and how. But the instinct is up, at least for the longer term. So something's got to give there. So let's clear it, all drawings, and skip to, we just looked at JP Morgan. What about Goldman Sachs? Goldman Sachs just had a technical breakout. I'm not used to this, so we're doing it on the fly. All right, so you can argue that it already started the breakout off of its, we're looking at a weekly candle here. So this was an indecisive candle right here, a doji for the week. Usually what follows afterwards is a big move one way or another because they were indecisive. They wanted to do something. They tried up, they tried down, they went back to the middle. Next is going to come up with a big move. Now this is a cluster of supply, so it will be tough, but they can do it because it looks like they already started it. You can argue that this is some sort of a cup and handle. Regardless, they broke through a place of resistance, a neckline, if you will, and they're making good headway into it. It's still a pivotal point, 215. If I look back, that's the same cluster we were looking at. This was, if I go back to it, to the weekly, if you can see, this was a level, an accident level, like right here, right? If I look back, okay. Oh my gosh. All right, so a while back, I put these 3 here, and I said head and shoulders, this might come. 3 circles, and it did come. That was a while back. That's 2016. But then, after that, they erased it. But look at that circle zone is exactly where they held and failed, and they're at it again. So definitely not an easy target. So I'm going to do what I usually do best. Use the one inside Windows. So look at this. So I could argue that this drop right here, visually we're coming up on halfway mark. So the halfback test usually is some sort of a resistance. They don't slice through. However, a reason to slice through it would be a headline, and earnings is coming up. So Goldman Sachs would be also a good bet. Now, this is a wild one. You know, they have a lot of trading into it, well, at least they used to. I'm kind of confused as to what they are right now. But if they do, that's where banks are faltering. Every other big bank last time they reported, they did okay, except when it came to the trading desk. They suffered one way or another. So I bet they may have suffered here. So that would not be my bet. I would bet on one that has a smallest trading desk. Do your homework and do that. So this is the Goldman Sachs, Citigroup, Morgan Stanley. Kind of similar situation here, less exciting. This is a pivotal line for some reason. I don't know when I drew this line. Let's zoom out. Holy moly, it's even longer. Oh my gosh, that's a monthly chart. Okay, so this it's at an area, a zone that has been pivotal since the 1999 era. So that if that's not sticky enough, in fact, look, there's just as much action above as below it. We're like halfway. Talk about a coin flip. Yeah, I can't touch this one. I'd be guessing. The only way I would do it is by selling puts. So if I want to buy it lower, then I'd probably do that. All right, BAC. This is the savior. What's going on here? Why do I call it that way? The government shoved all kinds of junk banks down its throat during the 2008 debacle, and it survived. So it's in the middle of this drop right here. It's exactly in the middle. And boy, this is a cluster right here. Literally a cluster. So if I wanted to say what the heck happened with these two candles right here, this would be the zone I'm watching. This candle and that candle. If you can't see it, boom. Thank you, Windows. So this candle right here and that candle right there, what is going on there? They lined that box to me. So these are the lines that I would chase, down or up. So a breach of the upper tail or the lower tail will carry momentum in that direction. That's my opinion. The quick and dirty on it. This is a daily chart. So I'm a buyer if it falls to here. I'm a seller once it gets to here. By seller, I mean if I'm long, I probably book some profits up there because until they show me they can breach that little tail, look at that back here. So this is a longer video than I wanted, but it's trying to do all kinds of stuff. First of all, laid out the schedule. Second of all, we talked about all of the elements of it, all the banks and the ones that are not in there. So place your bets, and short term, it is a bet. When I'm using options, I would rather bet on the ones that don't report early. So if I wanted to play Citigroup, I'd rather bet on the one that reports the day after Citigroup because the premiums for that bank will still remain elevated. Whereas the Citigroup at the open after the earnings, the implied volatility just completely disappears. So if I buy calls or puts, unless they get into the money, they get it wiped. So these are my thoughts. If you have any questions, let me know.